Have you ever pondered the immense power of exponential growth? This concept, while complex and elusive to the human mind, is a cornerstone in the realm of investing. It's like a silent snowball, growing in size as it rolls down the hill, gradually at first, then abruptly. When we talk about exponential growth, we're referring to the dramatic increase in value that occurs when something is doubled over a period of time. Let's delve into an ancient tale that beautifully illustrates this concept. Centuries ago in India, a shrewd farmer made a peculiar request to the tyrant ruler, Shriram. The farmer, armed with nothing but his wit, approached the ruler with a simple chessboard. On this chessboard, he placed a single grain of rice on the first square. He then made an unusual proposition. For each subsequent square on the chessboard, the number of rice grains would double. 2 on the second, 4 on the third, and so on, until all 64 squares were filled. At first glance, Shriram in all his might and wealth saw this as a harmless wish. A few grains of rice, even multiplied, seemed a small price for a ruler of his stature. So he agreed, not realizing the power of exponential growth that lay hidden within the farmer's request. As the squares filled, the number of grains grew rapidly. By the halfway point, the chessboard held more rice than the ruler had ever seen. And by the last square, the amount of rice required was more than the kingdom could ever hope to produce. Shriram had grossly underestimated the potential of exponential growth, and his promise had now become his burden. And so, the farmer became a wealthy man, all thanks to the power of exponential growth. How does this ancient tale relate to investing, you might wonder? Well, it's all about the power of exponential growth, or, as it's commonly known in financial terms, compound interest. Just like the clever farmer who requested the doubling of rice grains for each square of the chessboard, investors too can harness this power. By starting early and investing wisely in a diversified portfolio across the global stock market, you allow your investments to grow exponentially over time. Each year, not only does your initial investment yield returns, but so does the interest from previous years. This is the magic of compound interest. It's not about having large sums to invest from the get-go. Rather, it's about consistent, prudent investing, allowing time and compound interest to do their work. This approach can multiply your wealth in a way that's akin to the farmer's exponentially growing pile of rice grains. So the power of exponential growth, once harnessed, can turn any prudent investor into a wealthy individual, much like the farmer in our tale.